China is headed down a path driven by policies that are going to address the environmental consequence of being the world's factory.
China today is the largest electrical vehicle market in the world.
The structural design of these carbon allowance programs is to become scarce and reduce the cap over time, which should increase the value or the price of carbon.
So this is where Chinese government policies, when they say they're going to do something, it gets done.
By now, most investors have realised that ESG investing is building considerable momentum with significant capital flows chasing these themes. European markets were leading the charge, where the emissions trading system has reached critical mass. But now China's commitment to marry its long-term growth needs with a pivot towards green initiatives is also creating attractive investment opportunities across a wide range of sectors.
China is embarking on an ambitious plan to address the environmental consequence of being the world's factory. That will require a tremendous investment and manufacturing of electric vehicles, adoption of both solar and wind to offset coal production and electricity transmission. And it's all happening against the backdrop of investors adopting and embracing ESG investing.
It took China only 20 plus years to grow its GDP from $300 million to over 14 trillion today and become the second largest economy in the world in 2014. With now more people living in cities, they get access to better education and get a better job after they graduated, and also earning a high income. As a result, business along the entire ecosystems in offering better services to improve life qualities presents investment opportunities to develop. In many companies, in fact many Chinese companies in these industries are global leaders today.
Like many countries, China is making a deep investment in addressing the pollution solution. And we see that cutting across multiple industries, electric vehicles, solar, wind. We also see the implementation of a carbon credit allowance market like we see in the European Union.
China just recently launched its 14th five-year plan. And within that plan, for those on the outside looking in, they might be quite surprised to see how many green initiatives, how many carbon-based initiatives there are baked into that five-year plan.
In 2020, 5% of all cars sold in China were electric vehicles. That's expected over the next 4 years to reach 25%. So this is where Chinese government policies, when they say they're going to do something, it gets done. And we are seeing a tremendous push to clean technologies, particularly focused on electric vehicles, wind and solar. And we're going to see not only the investment push, the plan put together, but then we're actually going to see the implementation over the next several years. And within a decade, China reaching peak carbon, and further afield in 2060 being carbon neutral. So at the same time, as investors, we see tremendous opportunities in the companies that will benefit from these policies.
China has placed itself at the forefront of this megatrend, and obviously where China's concerned, the numbers are huge. China is committing itself to change, and the speed with which policymakers can implement their strategy should not be underestimated.
China literally budgeted for almost $360 billion for renewable energy investments and plans to have renewable energy accounted for 35% of its electricity consumption by 2030. Meeting these standards would mean that China has to create new renewable energy capacities as the entire US electricity systems. And China would represent half of the world, green building floor space. Today, the country is the world leaders in renewable energy and contribute almost 1/3 of the total global capacity.
We've witnessed firsthand the pollution in cities such as Beijing. And several years ago, it ultimately reached a breaking point where the situation, the populace was really frustrated and was done putting up with this tremendous negative effect, not only on their health, but also on their children. So government policies have really done a 180 in order to try to address that. And first among that is trying to wean electrical transmission, heat sources away from coal. So one, we're going to see a tremendous uptake in both solar and wind, which today account for about 6 and 3% of energy transmission in China. That's expected to triple over the next 10 years.
I tend to group these sectors probably into the three bigger groups, the RIR. The first R being the reformed sectors. These are the sectors used to be dominated by the state-owned enterprise, but now are open to private-owned firms. So for instance, the energy sectors today is at the front and center of the reforms. The I being the sector of innovative, as the name indicates, it covers a wide range of the sectors such as automotive, 5G, some e-commerce technologies. This is absolutely the focus of the government's 5-year plan. The last are being the rebalanced economy sectors. As you know, China is aimed to achieve a long and sustainable growth. In 2013, the country has been successfully rebalanced from the industrial-driven to consumer-driven economy. China today has the largest fleet of motor vehicles in the world, and in which the country has over 287 million cars, the same number like in the United States, but not to the same proportion to the populations. In US, 75% of the US population has a car, where in China only 20%. The catch-up means that an estimated roughly 770 million cars in China to be bought.
Over the next several years, you're going to see a dramatic change as we visit China again in terms of what the cities and their dealing with pollution look like. At the same time, we're going to see a multitude more of electric vehicles on the streets in China. At the same time, behind the scenes, we're going to see not only a push for wind and solar during electrical transmission. At the same time, we're going to try to see the process of weaning themselves off of coal transmission. And the net effect will be to try to get bluer skies across China.
Research shows in 2019, China literally emits the more greenhouse gas than the entire developed world combined. In February the 1st, 2021, China literally launched the long-awaited, the national emission trading schemes that covers over 2,225 of the coal and gas power plants and other facilities into this scheme. They are become the largest emission trading schemes in the world.
The global commitment to reducing emission levels is being crystallized by the carbon markets. Europe has been developing its own market over the last decade, but new entrants are going to see these markets develop even bigger volumes for investors.
What are the carbon markets? The carbon markets are the trading of carbon allowances, and carbon allowances are, very simply put, regulatory units that are mandatory for companies to purchase in order to continue emitting greenhouse gases like carbon dioxide, to continue polluting. So what is the carbon market? It's the trading of these allowances in various different global regions, and it seeks to create a price for carbon, which therefore incentivizes the right behavior, i.e. to reduce carbon emissions and to invest in technology that will further reduce emissions, green technology, carbon capture. And so the carbon markets have developed to create this free market price of carbon.
Carbon markets have reached critical mass in Europe, and the global market looks like it's set to develop further with the build-up of new entrants.
The carbon markets have now really begun to take off. I mean, they're nascent markets to begin with. The program started in the early 2000s and are only now hitting their stride. And what's really accelerating that stride is the fact that there are increasing focus on emissions targets, whether it's Europe seeking to be carbon neutral by 2050 and to bring carbon targets down by 55% by 2030, or California seeking to get back to 1990 emission levels, and not to forget China, which is this emerging program that is seeking to hit peak carbon by 2030 and then to carbon neutral by 2060. So as these regions start to really focus on cutting carbon, the structural design of these carbon allowance programs is to become scarce and reduce the cap over time, which should increase the value or the price of carbon, which should further tamp down those global emissions and reach those targets. So why they're taking off is that people that are companies that are going to need to buy these emission allowances are going to start hedging their exposure to it and getting longer these emissions. And we've seen the price in Europe, where some of the initiatives are the most aggressive, rising rapidly, whereas we're seeing in the US, we're starting to see them starting to finally take off.
One of the most exciting developments in emissions will be the entry of China, which will significantly deepen the global carbon market.
China has launched its program this year in 2021 after a successful pilot in 8 different regions of China, and that will be one of the biggest programs. So that program presides over about 3.3 billion tons of carbon dioxide, and in context, Europe is about 2 billion tons that is overseen by the European program. So China will be a significant growth for this industry. The beauty of these programs is that this is a free market solution, and we're starting to see the risk management, the allocation of resources, and that free floating price of carbon starting to rise.
The expanding global carbon markets and the rise of China's commitment to reducing its emission levels, as well as new technologies across the green investment space, these provide significant opportunities for investors. Kraneshares has developed a suite of ETFs that provide access to these global themes and to the technological expansion within China's huge market.
Accessing China used to be quite challenging operationally in the past, and also gain a good understanding of the local market also require very deep knowledge. And today, with the capital market reforms that has made the access relatively easier.
We see a multitude of opportunities for investors within a number of segments: ESG, electric vehicle, solar and wind, as well as the coming carbon market in China today that's very much established in Europe today. So we've really focused our efforts on creating products, exchange-traded funds, geared to each of these trends that are aligned with China's government policies. So first and foremost, our efforts in this area was our Kraneshares electric vehicle ETF, ticker KRS. We built cars to uniquely provide exposure to the electric vehicle ecosystem, that there are automakers will be beneficiaries, but you're also going to have the parts suppliers for batteries, such as the largest EV battery maker globally is CATL. But you're also going to have tremendous demand for the commodities that go into those batteries: copper, lithium, cobalt. We want to own those mining companies that will supply the ingredients that go into those batteries. So CARS was built uniquely to provide an investor a one-stop solution to the electric vehicle ecosystem, both upstream and downstream.
There is only one ETF offering exposure to the global carbon price, and that is KRBN. That's the Kraneshares Global Carbon ETF. And that's a fund that was launched last year during Climate Week. And so KRBN gives you exposure to the European Union allowances, the California carbon allowances, and the Regional Greenhouse Gas Initiative, that is the Northeast from Virginia up to Maine, covering the energy sector. And so this really is reflecting the 3 largest, most liquid programs, and it's dynamic. It will continue to add new markets such as China, such as the UK, as those markets evolve and develop the appropriate liquidity dynamics to be allowed into the index.
More recently, we've been focused on the China Clean Technology, KGRN. KGRN holds electric vehicle, solar and wind manufacturers, as well as green building makers in China today.
Investors tend to misunderstood historically and thought they have to give up on performance when investing in the green solutions. This may be true in most of the other markets, but it's not true in China. China's green solutions is outperforming the broader market.
Skeptics remain, but there is now huge momentum providing great opportunities within these sectors. Few can deny the size of the fund flows sweeping into this space. China's pivot could help to accelerate these trends, and China's intention to become a leader in green technologies, coupled with its size, means that investors should be seriously evaluating these opportunities and looking at Kraneshares' cheap and efficient access to these markets.
Well, I think part of what gets me excited every day when I jump out of bed and can't wait to see how the markets were doing in China overnight is we know that the companies within our suite of exchange-traded funds are the transmission engines for the government policies pushing on changing the environmental situation in China today.
These investments supported by the largest middle class in the world and benefit from the millions of people migrating to city in a country that can act most uniformly to achieve national goals in history.
Everything we do in finance is driven by science, math, and data. And we've really built our suite of offerings to be built on those three pillars as well. And ultimately, the end results show up in the performance of our exchange-traded funds. And we welcome investors to take the opportunity just to see for themselves just how well we've done investing in these focus areas, as well as looking at the data coming out of China, ignoring the headlines and actually focusing on the data.